Hello, world of investors. Els here. Going to show you another quick video on how to do a comparison. In previous videos, I've shown you how to kind of create a couple portfolios, create proxies, things of that nature. And again, if there's any other videos that you like, please don't be shy to go into the comments and let me know. And we can go from there. There's a lot of other analysis software that I use, but this one's one of my favorites. And I really enjoyed using it over the years. But I will also, again, you'll see other videos from other companies that provide really great analysis software. So please feel free to go in those comments. Again, feedback is easiest for you as a viewer, just to click like or dislike, and I'm going to know if this is, again, gaining traction or if it's relevant in your world. And then please subscribe and please hit that bell to make sure that we're always keeping you up to date on the things that we're trying to do to add value to how you interact with investments. So I'll get right into this one. So we're going to select the bank versus the non-bank, just because it's two finished portfolios. The proxies are going to be very similar. You're going to select them, and you're going to select Portfolio Report Builder. This is going to be a little bit prettier version. There is a security report builder as well, but that one's going to be much more kind of like dot matrix, like DOS style, like a little bit more archaic. And there's, again, a lot of value there. But if you're client facing and you're trying to kind of help your clients take action, you're trying to be simplistic and kind of focus on a couple key points, you can win more business this way. So we're going to go ahead and click on that, maximize the screen here. And you can just go ahead and through client portfolios or through model portfolios, you can select what you're doing separately as well, if these weren't the ones you were going to compare. And then from report options, you can go ahead and throw a cover page in there. But you're going to want to select, again, essentially a few things here. Portfolio comparison, you can set up your preferences and make that always be selected. But again, it's not too tough to just do it here. You're going to select in which order you'd want, so bank versus non-bank or non-bank versus bank. I would go right to the snapshot. Stock intersection, again, helpful, but this is going to be after this part. So this will be the primary start of this report, and then these will be supplementary reports following, and these will be produced, or let's say these reports will be shown on an individual basis. So it'll show the 80-20 bank and then the 80-20 non-bank separately in the sequences here. So you'll see bank Series F have a portfolio snapshot, and then the bank Series F have a stock intersection, and then following by non-bank. In other videos, we've done correlation matrix, but I don't mind doing that just to see what the non-bank comes up as. And from there, we'll kind of leave the rest. The grouping by, that's fine. Aggregate title, group advisor, apply current values. This is a good one. So say you had two different portfolios up here that in no way were, related, or even maybe, hopefully they're similar risk levels, but maybe they're just drastically different in any way. You can apply current values to proposed, and it's going to make the dollar values the same. So just little kind of key points that will help illustrate the point you're trying to make with the clients a little bit better. So we're going to do earliest common just to make sure it's all on the same page on the side by side, because there will be a chart there, a line graph chart. That's pretty much it. You can kind of stop there. Go ahead and generate report now. Get a nice, pretty side-by-side report of exactly the weightings, the dollar values, as we said. Copy those in that previous little feature. We're going to see the weightings are pretty close. Again, off by a few points here, but not much to really make much of a difference. There's even an extra 0.6% in cash there. Countries, pretty close. The portfolio, again, remember, it's portfolio's on this side for this report here, just in case you're looking here. Again, nothing too heavy, definitely a little bit more tech in the non-bank. But otherwise, numbers aren't so drastically different. Again, a little bit more financial services over here. Of course, it is the bank versions. And then countries, 13, not too bad. Not surprising, always heavy there, most portfolios. But anyway, here's your earliest common rate. So we have a couple younger funds that are keeping this short, but you're going to see that the benchmark was picked by Morningstar, but the fund underlying holdings are what we picked, right? So this one's pretty impressive. The non-banks have performed much better, and again, there's a lot of factors involved in that. Come down lower here, we're going to even see potentially what the MERs are. These are all F series, but again, non-banks in this grouping here, you're going to see so Fidelity, PIMCO, Dynamic, Canada Life, Manulife. You mean flagged for having higher MERs, but even with that higher MER, and again, no advisor fee included, performance is more than worth it, right? So 1 month portfolio, 3 month portfolio, 1 year, 3-year average. There's really no argument there. And then upside downside, again, where you'd want to be. So higher number here, lower number here. This one's a little bit skewed, and again, these are high star funds, but for some reason, it's just how it's coming out. So, and here's your numbers. It's pretty even. Again, clearly more heavily weighted on the growth side versus the value side, but pretty clear kind of who the winner is, let's say, on this. There's a lot of factors that have gone into that. And like the nice thing to see too, like the standard deviation is pretty close, right? So the measure of volatility, so the 3-year average is pretty close. Like you wouldn't really have too many arguments on that. I see the 1 year is like, say 1.5 more, but outside of that, not too much different. But the best and worst, they're drastically different, again, in favor of the non-bank portfolio, right? Non-bank Series F. So the best 1 year is 43, April to March there. The same timeline, April to March, 31. Best 3-year, September, so like the little crash, fourth quarter 2018, September 2021. Versus that, right? So, and the worsts, yes, we definitely took it here. Sorry, no, I was reading that wrong. No, there is not a worst that is outbeat by this side. So yeah, for some reason, these are all 5-star funds over here, but they've just performed much less than these 5-star funds here. They're all same asset class categories like Canadian equity, US equity, international equity, emerging markets, and global fixed income. And so just really surprising to see the outcome of these two opponents. So that's it, team. I want to show that on how you could quickly do portfolio report builder and get a nice visually appealing side-by-side of potentially what the client may have had previously to coming to you and what you're trying to propose to the client going forward. You don't even have to go past kind of these first 2 pages here. This is, again, wrong. You're going to have a client go cross-eyed if you really start digging into that. And then here's where now you get your individual reports. So this one's actually coming up as client aggregate, and then it should, there it is. So now it's going to come portfolio snapshot individually. So bank versus non-bank. You're going to get that, then you're going to get a stock intersection, and then non-bank. Right. So I'll leave the video there, team. I hope that was helpful to kind of go through what that process is, portfolio report builder. If you have any questions or comments, please leave them in the chat, the comments below there. It'd be very helpful. And if you do need help, I've mentioned before in previous videos, contact us, contact Morningstar. And here's the hours of operation, the phone number. Very helpful. You'll have to provide your username, so they won't just answer questions for anybody. But otherwise, a lot of self-service options as well for Morningstar. So any questions, thank you for your feedback as always, and good luck out there.